There we go.
Hello. Hi, Claire.
Hello.
Hi, ladies. Welcome back to Lockdown Life's Loving Life, the summit. Lovely to see you again. I wasn't planning on being here, but I wanted to come and say hi to Claire, so I thought I may as well hang out. Thank you for joining my session this morning. If you're here in the Facebook group or on YouTube, come and say hi. Claire can see all your comments, and I'll be leaving her shortly, and she will be hosting you. So if you don't know Claire Sweet, she is our resident finance expert. She's got more than 13 years experience in helping clients get into their dream homes. So today she's going to be delivering a masterclass so you can get your credit score in tip-top shape, which is a great thing to know, even more so for women running businesses, because we have all sorts of myths flying around there. So I'm going to leave you to it, if that's okay with you.
Yay. Okay. Yeah. Lovely to see you. And
Wonderful.
We will catch up a bit later.
We will. Thanks, Claire. Bye, everyone.
That's okay. Bye. So, hi, everyone. I'm Claire Sweet, and I am the resident finance expert. So what that means for you is that I am a financial advisor and money coach. And I work with a whole range of clients, but predominantly female business owners, to help them get their finances in order and to enable them to do whatever they want with their money, really, and create that dream life that they want. And today I'm here to talk to you about credit score and stuff. It is popping up with comments in the StreamYard. So providing you have hit the little button thing down here to give permission, your comments will come up and I will be able to answer them. If I've got any questions and stuff, I'm happy to answer them as we go, or I can pick them up at the end. But it would be great for you guys to say hi when you're here. Let me know where you are in the country and stuff, just so that we can say hello and stuff, which is great. So I'm going to crack on, and we will go from there and chat to you a little bit more about your credit score. So this is part of the Lockdown Life to Loving Life Summit. And this is, I think, the first guest expert session. I'm one of these people that likes to jump in and get going. So this is me first off. So yeah, let's have a bit of a chat and we'll go from there. Oh, people are popping up. Hi, Katie. Nice to see you here. So here we go. So this is me, Claire Sweet, financial advisor and money coach. I'm based in Kent in the southeast of the UK. I work with money coaching clients all over the world and financial advice clients in the UK. And that's simply because the regulations for financial advice vary from country to country, which means that if you actually need the regulated part, I can only currently deal with clients in the UK. But this is relevant wherever you are in the world. It will just be potentially slightly different terminology that we use, but there we go. So here we are. So credit score, why does it matter? And this is the reason that we're here, I suppose, is that you might want to buy your dream home because most people want to own a home. They want the security of having that place which is their own. And in most cases, unless you've got a trust fund or a lottery win, you are going to need to get a mortgage to do that, which means your credit score is going to be important when lenders are looking at you to work out how much they can afford to lend you. But you might want to be buying your first home. So it might be that you're not at the stage of buying the forever home yet, but you just want to get onto the property market. Maybe because you're renting and you're aware that you're paying somebody else's mortgage effectively because you're renting, or because you're living at home with your parents and you're thinking, do you know what, I've had enough of this. I want a place of my own. But even if you're not looking at home ownership, there are other reasons why your credit score is really, really important. So one of them is that you might need to remortgage. So the deal that you're on at the moment with your mortgage, at some point when that is finished, you'll have the choice between swapping to another rate with the same lender or going elsewhere. Now, if you want to be able to go elsewhere because they might have a better rate, or you might be buying a different home, or even if you're staying where you are but you want to borrow more money, you might need to go to another lender, which means they're going to be looking at your credit score. They're going to want to know if you are a good contender for borrowing. So this can be really, really important. But the fourth reason that you might need it is that you might actually need a decent credit score for your job. Now, I'm a financial advisor, as I said, and one of the things is that to be a financial advisor, the head office people, effectively, who deal with all the compliance, they check my credit file every year because they want to check that I'm managing my money well, because otherwise, how can they trust me to look after other people's money? And the same goes if you are in the legal profession or you're in the accountancy profession. And there are various other jobs as well where you need to have a decent credit score. So understanding how it works and the things that you need to look at are really, really important. And I've put here or aside in a brackets here or a rental agreement, because it's becoming more common now that if you want to rent a property, especially through an estate agent, that they will get a copy of your credit score before deciding whether they're going to let you rent a property, because they want to know how good you are at managing your money so that they know whether you're likely to pay your rent on time. So there are lots of reasons why you might want to do it, and that's what we're going to cover today. It's not going to be a massive presentation. I'm not one of these that fries your brain with 100 things on a PowerPoint. And all of this stuff is going to be available to you later. And I will chat to you a little bit at the end about how you can get access to this presentation and some other amazing content. So tell you a little bit about me. As I said, I live in Kent. I live in my dream home, and I've got alpacas in my garden. Yeah, these are my alpacas. Aren't they brilliant? So most people, you know, probably don't have alpacas. Certainly most financial advisors don't have alpacas. If you Google financial advisor and alpaca, you will get me on the first page of Google. And basically, what I wanted to show you is it's about quality of life. You know, we have built the life that we love. And yeah, if you follow me on social media, you're going to see pictures of alpacas popping up. I am a financial advisor and money coach. I'm also a public speaker. I speak internationally on money topics, and specifically on empowering women to take charge of their money and build the future that they want. Because do you know what, guys? There's no knight in shining armor coming to rescue you here. If you want it, it's up to you to do it. And I'm going to give you some really helpful tips today as to some things you can do with that. You'll see me on a range of publications online and in printed media where I've been featured for the work that I've done, and I've won awards for my customer service, Best Woman in Financial Services, Best Caring and Supportive Business. And my client is at the heart of everything that I do. I went into business very much thinking that if I treat my customers nicely, the money will follow. And actually it has. 13 years on, I'm still in business, and year on year, we do more work, more business, and help more people, and it's epic, and I absolutely love it. So yeah, so that's me, and that's who I am. If you want to know a bit more about me, so let's chat about credit score. In fact, let's not chat about credit score at all, because credit score in itself, the number that you get when you log into Experian, Equifax, Call Credit, whichever one you use, is not the most important thing in the world. What is more important is your credit history. Okay, this is what a lender is looking at. So when you see those adverts online and it says, we can give you your free credit score in 30 seconds or whatever it is, and people get all so excited, oh, I've got a 900 number, or I've got a 700 number. Actually, that's irrelevant in a lot of ways. It might make you feel better, but it's not going to tell the lender anything. It's not going to tell them about you as a person. And this is where your credit history comes in. So the things that I'm going to talk about now, your first step, if you wanted to do any of this stuff for this, is that you need to get hold of a copy of your credit report. Now, you can use Equifax, you can use Experian, Call Credit. There's one called Credit Karma. There's lots of different ones you can get. But what you're looking for is a full report with your name at the top, a list of all the credit things you've got and have had, with a series of either coloured dots or little ticks and crosses. Okay, you're looking for a report, not for a number. Now, we're going to talk today about what a lender is looking for, and I'm going to go through and tell you a bit more about that so that you can make some little steps to make sure that your credit score is as tip-top as it can be. Oh, I've got somebody pop up in the comments, best customer service. I can absolutely vouch for that. I'm not sure who that is, whoever it is, Facebook user. StreamYard hasn't told me who you are, but I'm really pleased. If you're somebody that I've worked with and you've had great customer service, I'm really pleased. That's the thing that makes me smile. And I had to say that because I can't. It just distracted me. I saw it. I was like, yay! Isn't it nice when we get messages from people like that? Anyway, let's go back to what we're talking about. So what the lender is looking for is, will you be able to pay back the money they have lent you, and are you reliable? And that is what your credit file will show someone, because your credit file effectively is a record of all the money you've borrowed and all the money you've paid back over the last 6 years. So if your bank account has an overdraft, it will show on your credit file. If your mobile phone is on contract, it will show on the credit file. If you've got a bank loan, a car loan, a mortgage, anything like that, and a credit card, it will say how much you owed, what your monthly payment was, did you pay it on time, have you had any late payments? And so for a lender, they can look at that and think, do you know what, this person is actually a good bet for us. Because they're looking for evidence. They're looking for evidence to say that if they lend you, especially on a mortgage, the biggest amount of money you could ever imagine in your life, are you going to pay it back? And how can we prove that? So how we prove that is by using your credit history on your credit file. So that is what we are going to talk about today. So today I'm going to give you 10 top tips, which is from my last 14 years, which is nearly 14 years, it'll be 14 years in June, placing mortgages. As a financial advisor, I have helped people buy their first home, their dream home, remortgage, raise equity, buy council houses, deal with credit card debt and still buy a house, do shared ownership, help to buy, equity loan, people buying houses off their parents, people converting residential mortgages to buy-to-let mortgages, you name it, we've done it. And these would be my top tips if you want to get your credit score absolutely top tip, shipshape, ready to go, so that you get the best chance of being accepted. So here we go. Tip 1, make sure you are on the electoral roll. So what this means is you are registered to vote in elections at the address that you currently live at. Now, I'm not bothered whether you're going to go up to the polling station and pay your vet and do your vote or not. You know, various people have various thoughts on that. We're not talking about that today. But make sure you are on the electoral roll whether you plan to vote or not, because it's something that shows a lender you are happy to be tied to the address you live at, and you're happy for people to know where you live, because electoral roll is actually a public record, and you can go to your local council offices and you can ask for a copy of the electoral roll and it will tell you who lives where in your district. Okay, there are a few people that opt out for various reasons, but on the whole, being on the electoral roll is a really good thing for a lender because it shows you're not trying to hide from anybody. You know, what they're looking for is somebody that isn't, you know, borrowing money, running off and then trying to hide, basically. So being on the electoral roll, really important. If you're not on already, you should be. If you are listed on the council tax for your property, you should be. If you're not, you can go on online through your local council and you can register. So just go in, if you type into Google register to vote, it will take you to the right page and get on and do that. Okay, number 2. Now, if this is the only thing you take away from this presentation today, make it be this one, okay? If you have got credit cards of any sort, most people have got them, they either use them regularly or use them occasionally, please set up a direct debit to cover either the minimum payment or the full payment or whatever you choose each month, but make sure there is at least the minimum payment going out each month. Now, the reason I say this is the most common reason that people struggle with their credit file, is that at some point they get sent an email saying that their statement for their credit card is available, because let's face it, most people don't get stuff by post now, it all goes in online. They get an email telling them either to log in and look at their statement, or here is their statement. And their statement gets buried in their email with like 500 Amazon notifications about things you've ordered and been delivered, and reviews from Trustpilot and all the other random stuff that ends up in your emails. And if you miss that and then don't make the payment, you end up with a missed or late payment marker on your credit file. That can affect your ability to get a mortgage, certainly for the next 2 years, but up to 6 years, depending on what else is going on in your life and what else is happening on your credit file. So by setting up a direct debit, you know the minimum payment is covered. If you want to go in each month and pay it off in full as well, by all means do that, but just make sure you have got a payment cover, because it can happen to anybody. Okay, I had one, even as a financial advisor, about 2 years ago. I was on holiday and I've got a credit card I use abroad. It's a post office card because there's no fees for using it in foreign countries. And I only use it abroad. Doesn't even live in my purse. It lives with my passport in my holiday drawer. And my card was cloned on my holiday. And when I got back, I managed to get the card sorted out and they issued me with a new card. What they didn't tell me when they issued me with a new card, because it all had a whole new card number and everything else, that they'd cancelled my old direct debit. So when I saw the email come in and say, you need to log in and do a payment for your credit card, I just deleted it and I thought, well, I've got a direct debit. So I didn't. This didn't come to light. So about 3 months later, when I was abroad on holiday and I went to use this credit card in a hotel and the card was declined. And when I rang them up, they told me it's because there was an outstanding balance that hadn't been paid. And I paid it straight away and I got the card unlocked. But it means that I've got that little amber circle on my credit file, which will sit there now for 6 years. And it means that will affect who might or might not affect give me borrowing. You know, some lenders, you take people like, for example, the Nationwide, if you've got a missed payment on your history in the last 2 years, you won't be getting a mortgage with them. So that's one lender I can't deal with. Okay, it really can be as impactful as that, and it can happen to anybody. So that's why we say is check that you've got a direct debit to cover the payment. Right, next one. Pay off and close any unwanted or unused credit cards. So it's good to have at least 2 credit cards and to have cards with a bank that you don't bank with. So for example, if your main current account is with NatWest, have 2 credit cards with other companies who are not NatWest. And that means that if you go into Sainsbury's to pay for your shopping with your debit card and the NatWest bank server is down, which does happen, you've got another way of paying. If the only other alternative payment method you've got is also a NatWest credit card, that's not going to work as well. Do you see what I mean? Not necessarily NatWest, although they had a problem a couple of years back, so did TSB, any bank. So just have a look at it and see. Make sure that they're with a different banking house and be aware that some banks are linked together. So for example, Lloyds Bank, Halifax, Royal Bank of Scotland, all part of the same group. So you wouldn't have 2 cards with them. But say, for example, my banking is Lloyds, but I've also got a Tesco credit card. So it means that if I can't use that, I've got another option. But make sure you don't end up with hundreds of cards sat there on your credit file. Reason being is that some lenders will be really nervous with that, because much as they might sit there unused, you could theoretically hit your local shopping centre and go and spend £30,000 on random shopping. And some lenders, it makes them nervous. So I would say keep 1 or 2 spare ones, and then the other ones you don't need, I would close them down. Make sure that you cut the card up and contact the provider and say, actually, I want to close this account. After 6 years, it will drop off your credit file anyway, but as soon as you close it, it will show as a closed account, and that will actually boost your credit score further. So that's worth looking at. Number 4, check your credit report for any discrepancies and get them fixed or removed. Okay, so on your credit file at the top, it will have your name and personal details, and then it will tell you who you are linked to financially. So people you are linked to financially should only be your current partner or husband or whoever that you share joint credit commitments with. So if you have a mortgage with someone else, they will appear on your file. If you have a joint bank account with someone else, they will appear on your file. You shouldn't have anybody else linked on there. So if you've still got people like maybe an ex-partner that you are no longer linked to in any way, then there is an option at the bottom to go to actually get them removed and get them unlinked from your account, which you're going to want to do, because if they have credit issues further down the line, that can then affect your credit too. So make sure you're only linked to the people you need to be linked to, but also check for any discrepancies, because if, for example, you had a late payment on a card or a loan, but the reason you had a late payment was a mess up at the bank, then you need to go back to the bank and get them to remove that off your credit file. There is no reason why, because their bank server crashed and didn't take your payment, you should be penalised on your credit file. So do make sure that if there's anything wrong, that you get them either corrected or removed completely, because that's something that will affect your overall credit profile. Okay. Making sure that any default CCJs or bankruptcies are removed from your file. Now, after 6 years, these should all drop off of your file. And if you have had a credit blip in the past and you're now at the situation where you are looking to do some borrowing, you want to make sure that your file is as accurate as it can be. So if you notice stuff on there that hasn't been removed that should have been, you need to go back to the provider and get that removed. Now, this is especially important with things like debt management plans or IVA type debt agreements, because when your debts are all wound up into one of these or into a bankruptcy, basically you pay the payment that you've agreed for a period of time, and at the end of that, the rest of the money or the debt is written off. So what you need to make sure is that those debts are written off and taken off your file, and that it's not still sat there as outstanding. So just keep an eye on it. Okay, I'm hoping that everybody is still doing well, all right, at the moment. Can I have a sort of a thumbs up or a smiley face or something that everyone has not fallen asleep and you are still sat there somewhere in the background? Because I do prefer an interactive session, and it is hard. So is this useful stuff? Are we finding this helpful? Any comments you've got, please pop them in the thread so that I can see them. That would be absolutely great. Right, let's carry on and let's get the last few of these done. So number 6. Now, you might think this isn't specifically to do with your credit file, but actually it's really, really important, is that you should have some element of a budget and watch your spending habits so that you can use any spare money to make credit repayments. Now, what I'm talking about here is if you've got credit cards with balances on and you're only paying the minimum payment, they're going to sit there for years and years and you're going to make a massive amount of interest. Even if you've got them on 0%, if you keep moving them every so often just to move them another 0% deal, each time you do that, you're going to pay a fee, £200–300 usually. This is all going to add up. So if you can go through at home, add up what money comes in, what money goes out, and work out if you've got some spare money. Have you got some money that you can use to start paying down those credit commitments? Because again, when you come to look at doing a mortgage, the amount of your credit that you're using, that will also affect your credit score. So say, for example, you've got a credit card and the limit on it is £3,000. If you've got £2,800 on it and it's nearly maxed out, a lender is not going to like that as much as if you have paid a chunk off it, okay? So they don't mind you having a credit card, using it and paying it off in full. They don't mind you having a balance on a credit card that you're chipping down over time. But what they don't particularly like is a credit card balance that sits there. You literally pay the interest or £20 a month off it, and then in 6 months or a year later, you move it to a credit card, another credit card, and another credit card, because it's not showing that you're making any effort to pay the money off. So have a look to see whether that's something that you could do. Keep your payments prompt and up to date on all bills. So where this is particularly important is your utility bills. So you might think that because they don't appear on your credit file, they're not important. But they are, because the most common cause of things like CCJs being added to someone's credit file is a utility bill that didn't get paid, and then the water board or the council tax people took you to court. Now, a CCJ is a county court judgment. They're all dealt with centrally in Northampton. And basically, if they chase you for the money and you don't pay it, they put this on your credit file, and that's going to be really, really devastating. If you've just found your dream home, you're looking to buy, and suddenly you find this on your file and you have got no idea. So make sure you're always up to date on bills. If you move house, make sure you've paid off the closing bill before you leave, and make sure that you keep up to date with all that type of thing. Again, I have seen it where somebody's moved out of house A into house B, and they get the closing bill through for the electricity, and they say, that's not the meter reading I had, and they start disputing it with the other guy that now lives there and all of that. Just pay it. For the sake of the extra 100 quid or 50 quid or whatever it is, just pay it, argue it out with the estate agent and with the client afterwards, okay? Don't leave that and let it be a problem on your credit file moving forward. Don't take out any more credit, okay? If you are looking to be doing any borrowing to get a mortgage or a loan in the next 6 months to a year, this is not the time to be swapping your credit card balances, taking out a new car loan or anything else, okay? You need to give your credit file time to settle. So every time you take out new credit, your credit file takes a bit of a dip, and then it slowly builds back up over a period of time, okay? So it's not a good idea to be doing that at that point. If you do need credit for something, then you need to make sure whatever you apply for, you are accepted first time. What you don't want to be doing is shopping around. So sometimes people think it's a good idea to shop around when they want to get, for example, a personal loan for a car. So what they do is they go and do a loan quote with Direct Line, and they go and do one with the post office and go and do one with Sainsbury's. Now, effectively what they're doing is looking for the best rate, and you're only going to take one of those loans. And you know that, but a lender doesn't know that, okay? Because it doesn't show why you didn't take out the one from Sainsbury's and the one from the post office or wherever you've applied. To a lender, they can read that you got turned down by those two lenders, and so now you're still looking and you're still looking. And actually that can make your credit file look really bad. So be really careful that you're only applying for the things you need. If you do need to get finance for something, there are various free tools you can use. There's one on the Experience site, there's one on the Compare the Market site, there's one on the Money Saving Expert site where you can go in and it will do a soft credit footprint of your credit file so you can see it, but lenders can't. and it will tell you of the credit card providers they've got who is most likely to accept you, so that you can go right in with the right one first time. Okay, so that is my little suggestion on that. Okay, number 9, here we go. Don't exceed your overdraft limit. Okay, that's the first thing. And obviously, in an ideal world, don't go overdrawn at all. Now, an overdraft effectively is a bank loan. It's just a flexible bank loan. And all it means is that you've set something up with your bank that says if you temporarily spend more money than is in your account, they won't hit you with a whole load of fees. Okay, so if you've got an overdraft limit of £500, it means if you go overdrawn by like a couple of £100 because your one of your bills comes out before your salary payment comes in or something like that, they're not going to charge you, but you must keep within your limit, because overdrafts show up on your credit file. If you go over your limit, you will get a little red dot, and that is something that a lender will look at. Okay, in an ideal world, you want to try not to go overdrawn at all. Now, I know that's easier said than done, but what I would say is if you are regularly getting paid and your account goes back into credit, and then during the month living in your overdraft, and then every time you get paid it just about goes into credit again, we need to be doing something about that. It's not a really healthy way to live. It plays a lot of tricks on your mind. And if you can actually clear the overdraft and be working in a credit balance rather than a negative balance, it helps prevent you overspending. The main reason being is that if your account is overdrawn by 300 and something pounds, you take more money out, it's still a 300 and something pound number. You don't actually realise that you owe even more money. And often an overdraft doesn't really feel like a loan. So yeah, try not to go overdrawn if you can. It's meant to be there as an emergency. That's the point. In an ideal world, if you've got a credit card that you can use, then you would use that to pay for this thing that is an unexpected expense and pay it off over a couple of months. It's just about how you manage your money rather than anything else. Okay, last one, number 10. If you have got any sort of savings sitting anywhere, you need to consider whether you should be using some of it to pay off your debt or not. And the key point about this is emergency savings. Now, I'm a great believer that whatever you are earning and however much money you have got in debt, what you owe people, what you're spending, everybody should have some emergency savings, okay? The amount of that you have is completely up to you. It's whatever makes you feel safe. But I would suggest as a minimum, most people are going to need at least £1,000 in a savings account. Now, you might not be surprised to know that 4 out of 5 adults in the UK have got less than £100 in savings. Okay, it really is something that people don't do. They keep meaning to do it and don't quite get round to it. The problem with not having any emergency savings is if your car needs repairs and suddenly you've got to pay £600 at the garage, you haven't got the money, you end up putting it on a credit card, which means you might have to pay interest and all of the bits that go with that. Now, what point here is saying is that some people will say, well, if you've got £3,000 in savings and you've got £3,000 on a credit card, that you should just pay the credit card off with the savings, because the savings are not getting interest and the credit card is probably charging you interest. And what I would say to that is yes and no, but what I would be looking at doing potentially would be maybe paying off a proportion of your credit card and then carrying on chipping away at your credit card and also starting to pay some money back into your savings to top that back up. Okay, it's really important that you have got some element of emergency savings, whatever you do. In an ideal world, when we're looking at how you manage your money, what I would say is when you get paid every month, put some money into emergency savings, even if it's only £20 a month, but just do it. Set it up as a regular payment so that every single month some money is going in there, so that you do start to build up this pot of money that you can dip into. And if you decide, you're going to come up with some money for some reason, you've paid yourself more money or you've sold some of the junk out of your garage or whatever you've done, stick it in your emergency fund and have that money, please, to fall back on. It will stop you getting yourself in a mess further down the line. Okay, so the goal, why are we actually doing this? What is the point of doing this? The point is you're going to show the lender that you are a reliable prospect for borrowing, which will let you get the best deal available. Now, when we are looking at finding a mortgage for a client, we've got massive range of lenders we can use. Okay, people from Santander through to Barclays, Skipton, Leeds, Yorkshire, little tiny building societies like Hanley Economic that no one's ever heard of, all the way through to the big guys like Halifax that everybody sees adverts all over the telly. Okay, they've all got different things they're looking for in terms of credit profile. So, for example, a couple of weeks ago, we had a lady, and the first lender we looked at for her that was going to be the cheapest deal available, she couldn't have, because she'd moved house 4 times in the last 3 years. And they said, no, they weren't happy with that. They don't like people who move around a lot. It worries them. But we found another lender that will do it. But the point is, the more things that are different about your mortgage case, the harder it is going to be to place your mortgage. So if you can get your credit file sorted, it's going to give you the best choice of lenders, which will give you the best possible deal. Okay. It's potentially going to let you borrow more money as well, because the thing about having a good credit score is it means that you are then eligible for the higher loan to value borrowing. So you'll have seen probably all over the TV about things like Help to Buy, where the government will give you 20% deposit towards your home. You put in a 5% deposit and you borrow the rest of that type of thing. And some of these schemes, a lot of them are only available to you if you've got good credit, because otherwise they're not interested. And if you've got a small mortgage or a small deposit, say you've only got a 10% deposit, you're going to need a much better credit file than if you've got a 30 or 40% deposit, because for the lender, you're a lot higher risk as a prospect. So getting your credit file sorted will let you potentially borrow more money and get into the house that you really want. It's also potentially going to give you lower monthly payments, because if you've got a credit file problem, we can nearly always still get you a mortgage. But we might have to go to a lender who specialises in helping people who've had credit problems. Now, historically, I've placed mortgages for people who've got IVAs and debt management plans that have just finished or are still running, all sorts of issues and problems. But they don't then qualify for a 1.5% rate with Halifax or whoever, okay? They're paying 3.5% because they're using a specialist lender. And for 2 years or 3 years until their credit file recovers, they're going to get clobbered for higher interest and therefore higher payments. So by getting your credit file sorted, it means that you get a lower monthly payment. And what I do when I work with people about house buying and things like that is we try and look at this a year or so, or maybe more, before you need to move. Because actually there are things you might need to be doing now to make your credit file better, so that this time next year, you've got a better choice of lenders and you can borrow more money and get into that house that you really, really want. Okay, so that's the key part here. So if you've enjoyed this session, I am the resident expert, the finance expert over in the Ladies Life Lounge membership. And it's called The Lounge, and it's now open. There is loads and loads of epic stuff that is going on over there. And over the next couple of days for the summit, you're going to see loads of stuff popping up on the social media for this. It's run by these amazing guys, Jodie and Roxy. Roxy popped up earlier. Jodie's around. I've seen her popping in and around doing stuff. They give an amazing amount of value. They bring in excellent speakers, and they're just so friendly. You can ask them anything you want, and there's no silly questions, which I think in this day and age is what people really need. So if you join the lounge, there's a whole load of stuff you get, things that you can work through, things you can download. There are masterclasses, in-person events, and all sorts of bits and pieces going on, which are really, really great. And they are doing a special offer at the moment that if you join up, rather than paying £49 a month that you would, you pay £29 a month, and you can keep that price for the whole time that you're in the membership. So it's amazing value for what it is, and you're getting it at an amazing price. Now, as a finance expert, I'm someone that likes a bit of a bargain and a bit of a deal, and of all the memberships I'm in, this one is absolutely amazing. And if you want to be able to come into that, there are various ways that you can sign up, and you're going to see links popping up, I say, all over your social media over the next few days. And as an expert, this is my link if you want to use my link. Why would you want to use my link? Well, the reason you might want to use my link is that I am going to be offering you some amazing bonuses. So here we are, we've got a bit.ly link you can use, which is Money Expert 2021 with capital M and capital E, because bit.ly's case sensitive, as you've probably found when you've keyed one in before and ended up on some really random page that you weren't looking for. I will also drop my links and things later on my Facebook page so you can find it. If you use my link, you're going to get some amazing bonuses. And each of the experts that's doing the sessions over the next few days is going to be doing this. They're going to be offering some bonuses. But if you'd like to get my bonuses, you need to use my link. So my bonuses, let's chat about what I've put in for you guys. So the first thing I've put in is my best-selling ebook bundle, which I normally sell at $11.99, and that has got in it a guide to how to price yourself in business for success so that you don't end up working for minimum wage. Really, really important. It's got My Guide to Profit First. Profit First is a book by Mike Michalowicz. It's a really popular way to organize your money within your business to make sure that your money is all in the right place at the right time. The problem is it's quite a heavy going book. It's written by an American. So what I've done is I've taken it and put it into simple English in an easy to action summary that works for a UK business model. You also get my 4 legal and ethical ways to reduce your tax bill, which is great. We all have to pay tax. It's one of those things. Tax is something that is essential. It makes the world go round, but you only want to pay what legally and ethically you have to pay. So we're not talking about dodgy schemes here where you're going to get yourself into trouble. We're just talking about using the right ways to do it. So you get those bits. You also get my interactive budget planner. Budget planning is so exciting. And it's really strange that you might think I say that. It allows you to see where your money's going and find the money to pay for your dream, okay? One of the things that puts people off doing it is the thought of having to write it all out and having to add it all up. So this is a PDF. You key your numbers in, it adds it up for you at the bottom, okay? I really can't make it any easier for you at all. So that's the first bonus you're going to get is my book bundle. The second bonus you're going to get is my Demolish Your Debt plan that I normally sell for £74 on my Teachable website. You can find it, and I've subtitled it The Modern Way to Deal with Your Debts and Move On with Your Life. So basically, we all end up with debt at some point in our life, whether that's bank loans, car loans, or whatever. And what I'm going to do with this plan is show you how you can get out of the spiral of debt, get your head straight and feel calm about your next steps, see what debts you've got, work out which ones you need to repay first and why. And I'll give you a clue, it's not always the most expensive ones you pay first. And then set up a payment plan that you control, where you're going to save hundreds of pounds worth of interest, but you're doing it in a way that feels right for you. The reason I've put this in is it's just such an amazing thing for you to do. It's a study at home thing, which means that you've got little videos, you've got text and exercises to work through, but you can do it privately. You don't need to share it with anybody else because, let's face it, no one wants to talk about their money in a public space. It just doesn't work, does it? Okay, so again, how you sign up, you can use my bit.ly link, which is Money Expert 2021. Or if you go to my Facebook page, which is Piece Together Money Coaching, I'm going to put a post on there shortly, which will have the link and bits and pieces if you want to join me. Failing that, feel free to private message me, friend request me on Facebook and send me a message and say, what was that link again? And I will ping it over to you. That is absolutely fine. So there we are. We have got to the end. So I need to work out what I'm doing here. Stop sharing. And there we are. That's me back at the end of it. So if anybody's got any questions, feel free to pop them in the chat. I'm quite happy to answer questions and things. That would be great. And we've got a little bit more time here that we can do. So if there's anything you want to ask, please do. Roxy has put my link in the chat for you so that it's there. What else have I got here? Awesome book. Yeah, Profit First. Profit First is something I started using in just over 2 years ago. And it's meant that it's prevented me overspending in my business. It means that I always get paid every month and I've got the money for my tax bill when it comes up. So when my accountant emails me and says, you need to pay your bill, the money's there, sat in the account, ready to go. The peace of mind is just incredible. Really, really good. Okay, fabulous. So if anybody's got any questions, this is your last chance to pop them in there and I will answer them. Other than that, I will catch you guys another time. So the summit continues for the rest of this week. There are some other amazing speakers booked. So do log in, check them out and go from there. And I say, if you want the link to the lounge, it's here in the comments, just here below the video. So click on it, buy the book, or get the book for free, effectively, isn't it? So yeah, join the membership, get the book for free, and I will see you inside the lounge. Take care. See you later. Bye.